So the week is over, but however, I want us to just take a good look at what happened this week across all the currency markets. If you're new to the channel, the name is Chuku Nicholas and welcome to the channel. The channel is all about education and Forex analysis. Do not hit the subscribe button if you're gaining value from this. Without further ado, let's head right into it. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. Okay, so we're going to be starting with the Australian dollar, and simply all I have to do here is select this week. So everything we had this week is clearly a lot of it is bearish, a lot, except one single news: the unemployment rate released this week. That was on 11th, some days ago. That was like 2 days ago, and it was the only good news the Australian dollar had to tell us this week. So basically, what that means is the Australian dollar is in a downward spiral as of this week. If you're trading anything around the Australian dollar, I don't think you should be seeing like real good charts. If you're seeing real good chart, then it's definitely some hedge fund guy pumping up the market because he has some deal to let off somewhere at the top. So that is it for the Australian dollar. A lot of the news was bearish. Some of it was neutral. We had the building approval year over year, month over month, and private housing telling us neutral information. Even the speculative net position is in total, it's bearish. I mean, the CFTC compiles the list, talks about people who are trading it in general, the hedge funds and everything. The speculative aspect of it, it's not looking good. So it means don't expect so much from the Australian dollar next week. They might not have so much good. But then again, I worked on this sheet today and I'll be showing you guys something tomorrow regarding planning for the week ahead. Moving on, we are going to go to the Canadian dollar and do the exact same thing. Just select this week. So from the Canadian dollar's perspective, we don't have much news. We have the speculative position, which is good, quite bullish, as you can see here. Very, very good news to look at. The total number of contracts on the speculative side is saying they're expecting the Canadian dollar to grow over time. Their imports are good, quite good. You know, it is right there, it's bullish. They are not importing as much as they need to, meaning the economy is producing good enough. Their interest rates, however, did not change. So they released interest rates information and there was no changes. They still stay at 2.25%, which is it shows growth in an economy, but then again, it doesn't show should I say, it doesn't show weakness, but it doesn't also show so much growth either. So it means they are fine with the way the economy is looking at. The central bank is looking at it like, okay, it's still fine, the job data is good, the growth data is good, we don't need to do anything, just let the economy do its thing, which is a good thing. But the leading indicator, however, month over month, is not good news. So just keep an eye out for that end. Moving on to the Swiss franc. Now this is by far the most stable. I can't say this enough. This is by far the most stable currency in the world. The economy that has the it's not as if it's stable, like it doesn't shake. It's stable in a sense that looking at it compared to every other economy, it is by far the most stable. So this is where people just throw their cash in and let it sit down. The Swiss franc. So they only had 3 information for us this week. The first one is the speculative net positioning, and surprisingly, it seems like the speculators are not having confidence as they used to have when it comes to the Swiss franc. So we're having a little bit of bearish situation there. Now take a good look at that number. It's just 300 contracts away, so it's not really like they are so bearish about it, but in general they are not really good. Their rates, on the other hand, the central bank remains zero, absolutely flat. Now this is one of the biggest reasons why this is one of the most stable places to put your cash in. There's no fear for cash loss when you're in this place, so it's quite good. The consumer climate, however, still neutral. Nobody feels like their money isn't doing anything. Nobody feels like their money is also getting missing. So it's just a stable economy all through. Moving on to the European economy. The European economy this week gave us just two news. Now this is December and it's mostly expected. This is the end of the year where people go on holiday. So does the what is it called? The kings and queens of the European economy, the high traders over there and all that stuff. The only thing we have here is the investors' confidence, which is neutral. And it's December, like I said, you don't expect anything. However, speculators are looking at a possible reason for this currency to gain value. As you can see, they are quite bullish with 7,200 contract difference. Now, that is telling you speculators are looking at this place and saying they expect growth in coming weeks, days, maybe even some couple of months. So the European economy still doing quite good. The British pound, now the British pound is something that I've noticed recently has not been so good, and clearly you can see it right here. We have so much sentiment in the red. In fact, there's no neutral sentiment. That's the thing you need to really observe here. There's no neutral sentiment. The speculative stance right now is bearish, heavily bearish, with 24,000 contracts in the red. Clearly, there's not so much confidence in the British economy right now. The Thomson Reuters stance is quite bullish, alongside the industrial productions. Apart from that, their GDP was not that it's bad, but it's not up to expectation. You know, expectation was it was going to go good. However, it went back on the month over month, also on the year over year. The manufacturing, now the industrial side is one side, the manufacturing side is another. The manufacturing side is also bearish. The trade balance is bearish. The monthly GDP 3 months, that's quarterly, every 3 months, is also in the red. So the British pound economy is not something you should want to run into buying. Like I said, I had a trade yesterday that I kind of spoke about on my last video. You can check the link above here and watch it. That trade is definitely going to hit me in stop loss, unless we get some crazy positive news next week, which we'll be looking at if there's a possibility for that tomorrow in tomorrow's video. So do well to come and watch, and if you're getting value from this video, do well to hit the subscribe button and hit the notification bell, because you definitely need this kind of information when it comes to trading. Moving on, we have the Japanese yen, and this week on the Japanese yen, what we had was not so much news. However, there was mixture. Compared to other economy we've seen, it's either one-sided. This side, there was a mixture, but it is still tilting towards a certain direction, right? The speculative positioning, as you can see, is negative, meaning speculators are not still trustworthy. They're not trusting the yen, right? They're just not trusting the yen. That's just it. The trust for the yen is not it's not super like the euro. The British pound trust is also not good. The good things they have though is their bond buying. The bond buying, the capitalization utilization, or rather capacity utilization, industrial production, and the large manufacturing conditions. Those were the good news this week. Apart from that, the Thomson Reuters, the Economic Watchers Current Index, the Reuters Tankers Index, the monthly money supply over 3 months, M3, as the third quarter, and the machine 2 orders. Well, these were not good information. So the only good thing that is here is the fact that the PPI, the producer index, is still flat, meaning producers are still seeing it as the economy is not bad, it's not good. It didn't get bad, it didn't get better, it's just where it was, meaning there's still hope for a chance to dive up next week if they get good news next week. So they have far more better chances than the British pound in terms of what we expect based on what we've seen. For the New Zealand dollar, let's see, this is the Kiwi, and the Kiwi this week we had good news. Well, except for the speculative positioning, the external migration and visitors, as well as the visitors arrival. So the tourism in the New Zealand dollar, or rather in the New Zealand economy, is not so good currently, and you know they rely a lot on tourism for cash flow. However, that doesn't kill the fact that the electronic card sales, retail sales, meaning people spending money to buy things, is still in a good direction. The PMI is really good. The producer managers still looking at the economy like you could still produce here. I mean, there is money, people are buying, so it's definitely going to go well. The long-term migration. Now, this is the funny thing. The external migration / visitors, meaning people running away or people traveling out and people visiting, did not get good news. However, people who are looking to stay long-term had good news, meaning you can see why the producers are saying there's a good reason why they should be producing in this economy, because they are seeing people sitting down long term. That is it. So those kind of information, as well as the manufacturing sales volume, it also went up. So the New Zealand dollar is looking at a possibility of good news next week from the information we have this week. Now, as a trader, all you do is speculate, right? Now, for the brother that gives and keeps on giving, the US economy, this is by far the one market that if you're a trader, you do not look at the US economy. I'm sorry, you're not trading. You're just gambling in the market. These guys, they have the biggest amount of news every single week, every day for that matter. In general, not really every day, but in general, they are like the biggest. And it's the world reserve currency, the world powerhouse. Expect a lot of information from them. And as you can see, a lot of information from them is here. So we have all the way from the mortgages to the jobless claims to the oil inventory, the 4-week bill, 8-week bill, federal balance. So we're going to look at the US dollar specifically, and we're going to look at it in a very, very in-depth manner. So we're going to look at all the bearish news first, all the bearish information that came out this week. We have things like the initial jobless claim. Now, this is not good news. It means the job market is getting bad. That is what that particular information means. The jobless claim going up means a lot of people are saying, we don't have jobs, we're losing our job, we do not have jobs, we can't make money. And US economy is a consumer economy, so if people are not making money, people can't spend. If people can't spend, the economy is not going to move well. And you can see why reducing interest rates is kind of the push forward right now. It's kind of these reasons like this. The oil in the US, or the oil importations, the distillation, the fuel production, the inventory, we're not having good news also when it comes to the US. So their ability to produce more oil is going bad. So what does this mean? It means there's a high tendency that the cost for buying fuel or oil related products will most likely go up soon. The supply is dying, so demand is going to heat up, right? Because there's not enough for so many people. People are going to start demanding, price is going to go up. So that's something you need to always look ahead for. We have the Fed balance sheet saying in the red again, negative. We have the reserve balance, same red. The oil rig, same red. Their importation for the whole of September. Now this is September, it's like 2 months away. It's red. It's not really something that affects right now, but it's just telling you what has happened, and looking at that, what has happened determines what you're going to be seeing right now. The 10-year notes auction, red. The wholesale inventory, well, wholesale inventory is not really big deal. It's a lagging indicator. It's a show of the decisions of other situations and what it has led to. So the wholesale inventory, we don't expect it to be good. Now, moving on to the good news we got this week. The good news we had this week was, surprisingly, the crude oil inventory alone, now inventory, was good news. The continuing jobless claim. Now, this is unlike the initial jobless claim, right? Initial jobless claim is the number of people who initially said, I'm jobless. The continuing meaning people who had initially said they are jobless, are they still jobless? So that particular information reduced, meaning people who did not have jobs, some of them got jobs. Quite good, but if more people are losing jobs than the people who are getting jobs, then I think you already see the entire situation. Good news is there are a lot of job openings according to the Jolt. Jolt says there's a lot of job opening right now. The export was absolutely outstanding, really beautiful. The US exported a lot. They didn't import as much as, or rather, their import was bad. They imported a lot too. They exported a lot also. So it's kind of like a counterbalance right there, somewhere in the neutral zone when it comes to import-export. Small business optimism. Now, starting a small business in big countries, scary shit. Very scary. However, this is good news because what we're seeing here is saying that starting a small business, the optimism around it, that is the joy people get, the euphoria, the expectations that small business would grow, is quite tilting towards the good side. But this is a coincidental information that comes due to some other information that has come through. So this is everything we had this week, except for the neutral stance. Now, the neutral stance, we have the wholesale trade sales, the inflation expectation, and the US leading index. These informations are just neutral. So generally, I would say the US economy kind of neutralized somewhat this week, to a small extent quite neutral, but not like real neutral, right? It was somewhat in the neutral side towards the bearish side. And you can clearly see that from the 14 days and the 4 days news calculator right here at the top. So this is it for what happened this week. Tomorrow we'll be looking at what we expect next week. We're going to look at all the news that is going to be coming out next week across all the pairs and the expectations we have, or rather the major economic analysts already have for it, giving you a projection of what you should be aiming to look at in the charts next week. If you like information like this, do well to hit the subscribe button. Watch the video that has to do with market structure. You will definitely learn a lot regarding technical analysis from this video. See you all in the next one. Peace.